Hello students, welcome back. As I have already told you in the previous video that I'll return again with another problem solving from this chapter, adjusting the accounts. So here I am. As I have already told you, in this problem solving class, we will try to solve a comparatively more complicated problem of adjusting entries. I hope till now you have rightly guessed that in adjusting entries, we have a fixed amount of fixed type of account which are debited and credited. Just think about what should be the adjusting entries for supplies expense. Very simple. Supplies expense debit, supplies credit. What about unearned revenue? Unearned revenue debit, revenue account credit. So it's not the challenge, right? Identifying the debit account and credit account is not the challenge because you already know that. So what makes adjusting entries more challenging is the calculation of the right adjusting entry amount. So that's what we will try to understand from solving this problem. Okay, so this is our problem number 2. As you can see, what it has been mentioned here is that a review of the ledger of Remina Company at December 31 produces the following data pertaining to the preparation of annual adjusting entry. That's very important information for us. Annual adjusting entries, which means that for this company, the applicable accounting period is 1 year. And since it's the last day of their accounting period, December 31, so we can easily guess that their accounting period starts from January 1 and ends on December 31. Very simple, right? So here we'll have to calculate the adjusting entry amount for a year from January 1, 2017 to December 31, 2017. Okay. So in this short video, I will just solve this problem, this part of the problem, which is problem part 1. And in the next video, to keep the video short, I'll discuss the next part. Okay. So be with me. What about the first part? Here, the information is like prepaid insurance 10,440. That means we have an asset of prepaid insurance like this. Then the company has separate insurance policies on its buildings and motor vehicles. That means it has a separate policy it has purchased for buildings and also another policy it has purchased for its motor vehicles. Right? These are the information about those two policies. There is a one policy, we call it, the term is policy B4564. It is a policy purchased for the building and it was purchased on April 1, 2016. And how much we have paid for this insurance? 7920. We have purchased this policy on April 1, 2016 and we have paid $7920 to purchase that, and this insurance premium will cover, or the policy has a term of 3 years. That means this will provide us insurance coverage of 3 years. Okay, more than 1 year, 3 years. As simple as that. Next, we can see that we have another policy which is for the motor vehicles or vehicles, which was purchased on July 1, 2017 for with the price of $4,500. So $4,500 we have purchased this policy, and this policy has a term of 2 years. That means this policy or this insurance policy will give us insurance coverage of 2 years in total. Okay. So this is the information. I think we should sort this information so that it will be easy to understand. Okay. So I have done that for you here. I hope you can see, right? So here I have just written the information given there in a sorted way, right? We have arranged it so that it is very easy for us to understand. So we have a policy B, is for the building. This the price of the policy is $7,920, and we have purchased it on April 1, 2016, and the term is 3 years. Our insurance coverage is for 3 years. Same thing we have just there. I have just written it here for better understanding or easy understanding. Okay, and we have a second policy which is for motor vehicles with the price of 4,500, and this we have purchased on July 1 2017, and the maturity or the term of that insurance premium is 2 years. That means this insurance will provide me the benefit for 2 years. Okay, first of all, we have to keep in mind that what is our accounting period. We have easily guessed here that our accounting period is 1 year, and it starts with January 2017 to, I hope you can see that, right? This is our accounting period. We are doing the adjusting entry for year 2017. That's very important information. Okay, so 2017 we are doing the adjusting entries. What about this policy, first policy 1? Okay, the policy 1 is we have bought for 7,920 for 3 years. So we can easily calculate from here that what should be the expense for each month. We know that 3 years equal to 36 months, right? So for our adjusting entry calculation, it is better that we calculate the expense or insurance expense per month, and that's very easy calculation, right? We just have to write 7,920, the total value we have paid for this policy, and we have paid it for 36 months or 3 years. If I divide by 36, I get 220, or this 220 means this is the insurance expense for each month. Every month 220, 36 months, 7,920. As simple as that. Okay, so this is our insurance expense for per month for policy B. With the same method, we can easily calculate the insurance expense per month for policy A. Very simple. How much we have paid in total? 4,500. And from how many year or how many months we have paid the insurance premium? 2 years or 24 months. So if I divide it by 24, I'll get 187.5. What does it mean? This means this is the insurance expense per month for these two different policy. For policy A, the expense is per month, the expense is 220. For policy B, the per month expense is 187. Very simple. But here we have only calculated the expense per month. But now we are doing the adjusting entry for a year. And that's a very important thing we have to remember. For 2017, what should be the insurance expense for Remina company? Okay. So here I have made a time series for your better understanding. So think about the policy B, the first one. We have purchased the policy B on April. So this policy starts covering from the April. So it has covered 9 months of 2016, as you can see, April to December. Then 9 months gone. Then it will also cover the whole 12 months of year 2017. Very simple. 9 months of the first year, since it is for 36 months in total, it will also cover the year 2017. It will cover the whole of year 2017. Then next year it will also cover 12 months, and the next year it will also cover 3 months. Why 3 months? Because first 9, 12, 12, then 3. If we add all the 4, we will get 36 months. So this insurance policy will cover 36 months. So it will start with April 2016, and this coverage will end on March 2019. Okay, but now we are not bothered about all the years. Can you guess which year we are bothered about? As I have already mentioned, we are only bothered about the adjusting entries of year 2017. As you can see, that's why I have marked it yellow, so that I can keep it different from other year. So our thing is that we have to understand how many months of year 2017 does this insurance policy cover. Very simple. As you can easily see that this insurance policy covered the whole 12 months of year 2017. So we can easily input it here. What is written here? Coverage in 2017 in months. That means how many months of 2017 this insurance will cover, or in insurance coverage of this particular insurance policy. As you have already learned it, it is 12. Okay. What about the next one? The next policy you have purchased on July 1, 2017. That means July 1 of this year, and it will last 2 years total. So here you can see, here I have purchased the policy on July 2017. So it started with July 2017, 6 months of this year, then next year 12 months, and then the following year 6 months more, 6, 6, 12 equal to 24 months. As I have already mentioned you, in our adjusting entry, we will just focus on how many months of our accounting period we should record, okay, or cover. So as you can see easily by the yellow marking, that this insurance policy cover only 6 months of this particular year 2017. So that's very important for us. So if we write record expense, we shouldn't record expense for more than 6 months, because this insurance cover only 6 months of our year 2017. So the second policy cover 6 months of year 2017. Now everything is so simple. Now you know that what is the insurance for policy B, what is the insurance expense per month? This 220, or you can also write 220. And what is the, how many months of this year it cover? 12. So 220 into 12. This should be the insurance expense for policy B. Very simple, right? And what should be the insurance expense for policy B for the year 2017? Sorry, policy A, the second one. Very simple. Per month, the insurance expense should be 187.5, and this insurance, or this insurance policy, cover only 6 months of my year 2017. So here the value should be like this into this. Okay, so this is the insurance expense for policy A for the year of 2017. But whenever we are doing adjusting entry, we are doing it as a whole for the company, right? So this is our insurance expense, this is also our insurance expense. So we should calculate the total value of this two. What should be our total insurance expense for the year 2017? So we can write total insurance expense of 2017. So our total insurance expense of 2017 will be this 3765. Okay, so this is our total insurance expense. We have calculated it. So since we have calculated, we can now write the adjusting entry for this first comparatively complicated problem. So here I can easily write, since this is the expense of insurance expense, so you already know that the insurance expense should be debit, which you have already done in the first problem too. What should be the insurance expense value? Very simple, you have already got it, 3765, the total insurance expense for this company. So I'll write 3765 debit, and because of that we have to credit prepaid insurance with the same amount, 3765. So this is how to calculate comparatively complicated adjusting entries. In the next with this, solving this, I'm concluding this short video. In the next video I'll try to solve the second one, or second part of this problem. Okay, so hope to see you very soon with another video on solving this second part of the problem. Okay, thank you for your patience. We'll return soon, inshallah.